one of the things I can suggest is going to our newsletters tab on TFNN.com. Specifically, I want to highlight the opening call by Basil Chapman. Now, earlier this morning, I couldn't sleep last night a little bit. I was kind of like, what is going to happen? Oh my goodness, do I add more? Do I need to switch it? I'm now starting to look at some other stocks outside of tech, and I actually happened to read Basil's newsletter today. He had some very interesting insight on that. I strongly recommend checking this out. You can do so risk-free if it is your first time subscribing. We have a 30-day money-back guarantee. Additionally, you have a 90-minute live webinar that he hosted on November 14th. That is for subscribers only. Now is a perfect time to check out the opening call. Basil, how are you doing? Basil, can you hear us?
I forgot to sign in, I think.
Well, you can hear you perfectly, Basil.
Oh, you can? Okay. Yep. Hi.
So what are we looking at, Basil? Again, I read your newsletter today. Obviously I'm not saying what was in it, but I'm telling people you should check it out because I liked kind of the thoughts you had going on. If you could kind of explain what you're looking at here.
Yeah, so basically what I've been looking at is, well, let's start from the beginning.
Yeah.
On the 13th of January, we were waiting to see what would happen with the Dow going from that Friday, which was very ugly, into the Sunday night. And as I was doing my analysis, and I did my analysis with the volatility index, with trend lines, with a technique that I used called the Inside Track Propellant Zone, I realized that there was a really good chance that the Dow was about to turn around. How high was impossible to say. So that morning on the 13th, we went long. We actually added to our long positions. And it turned out that there was a very strong, I spoke to you the very next day, the Tuesday, and I said, either this is a low or the low. It's hard to say because if it's a V-shaped pattern and everybody just clamors to get in because they keep missing, that's really powerful. But if it stalls and makes a little bit of an H pattern, it could be a slow mover to the upside. Well, it gapped up the next day. It was fabulous.
Uh-huh.
So using the techniques that I use here where I show a cup formation, and if it's possible, and the low of a cup formation should give you the number of bars on the left going to the low equal to the number of bars on the right. But it doesn't always work out that way. And if visually it just doesn't look like it's going to work, I choose a different candle to use as a midpoint, the fulcrum, the plumb line, I call it. So with that, you can see that in this particular instance, yesterday we went right up to this pink rectangle with the right direction, with a measured move, and we got there exactly. Today we popped up, and now it says that the high of 45,073, which is made on the December the 4th, should be hit in the next few days. So here we are. Today's high so far, 44,976. So we're obviously just an eye blink away from the all-time high. The S&P did go to an all-time high the other day before it pulled back. So in my newsletter, what I'm trying to focus on is there are some areas that look like they've kind of worn out their welcome. They just need time.
Yes.
And in that aspect, I would put the semiconductors in a trading band. They haven't worn out their welcome. They're still very important.
Yes.
But it's kind of in a trading band. But within that, you had just mentioned the AIQ. So first of all, let me just finish with the Dow. So the Dow daily is only in leg C. We always expect at least a D in a buy mode, which is a Zen. So the Dow should still go to higher highs. And the weekly chart shows you that it's very strong. And if this MACD, the moving average convergence divergence in the weekly chart, can cross positive, that should add another series of highs to the Dow. So it hasn't done that yet.
Okay.
So all the technicals, as far as I'm concerned, in the day are very strong. And the stochastic, which is at 97.5, you can't ask for anything more than that. Flat and in the 90s, especially above 95%, that's fabulous. It's going to take something awful to really get that to go back down under 80%.
Yes.
So that's the Dow. Then you had just mentioned the artificial intelligence. Well, we've been along the AIQ, which is the Global X Artificial Intelligence, for quite some time. And I waited to see if it was going to break out above the 9th of December high of 40.65, and it did 3 days ago. So it's worth looking at this. When we return, we can do that.
Yeah, absolutely, Basil. Please stay right there. Folks, we will be right back with Basil Chapman right after this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching The Tom O'Brien Show. I'm joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter. He's also the host of the Tiger Technicians Hour, live right here on TFNN, 10 a.m. Eastern Time. Basil, before we went to the break, we were looking at AIQ, had a gap up on the left chart there, kind of trying to get what you're thinking about regarding AIQ.
So this is the Global X Artificial Intelligence ETF. Let's go backwards. So the monthly chart, leg D, the 9-period move, the price is way over. Let me get the pointer. The price is way over the 9-period moving average, and the 9 is way over the black 14-period moving average. So the green is way above the 14. I love that. The MACD is just steadily moving higher. Mm-hmm. You see the aperture between the red 26-period moving average and the 9-period differential, that's green. And the stochastic is 92% in a monthly chart. That's fabulous. And the on-balance volume is just a tad overbought, but it's in leg D in the Chapman Wave methodology. D is where other things can happen, but so far that's very positive. The weekly chart has just gone to an E, a slightly higher high than the 40.65 high of the 9th of December. But look, all the technicals are very strong in the 9-period over the 14, and the price is over that. MACD's pulled back a little bit in the stochastic. So this 9 is really the guiding post. So you were mentioning AIQ, but in the artificial intelligence, anything that creates perceived benefits really helps any particular sector. So my suspicion is anything that's happening with the DeepSeek now should actually broaden the appeal and the usage. So I think that I had to wait for this gap It went to a peak B on, what's today? Today is Tuesday. On Friday, then we gapped down on Monday with the news, and now we filled the gap. We went a penny above the low of Thursday. So that just says to me, that's a peak B. There's a good chance that we're going to go to a leg C and then a D. So that I needed to wait for today before I did anything for subscribers. But there's a chance we might even add to this. I need to see how we close and do an assessment. But that's the way I've been looking at it. We've even seen Microsoft, there it is, break the high that was made last week. Mm-hmm. It's now in a leg C in the daily chart, and it's acting extremely well. So I'll just talk about some of these techniques. These two lines here, I usually have them in green and red. That's the repellent line. Look how Microsoft couldn't break above that, even with that big gap down. Yesterday, it closed at the high. I had to wait to see how we would be today. We are actually long from 338. It's trading at 447 right now. This is another thing that I'm looking at. In this particular market, we're rotating through different areas so that particular sectors and stocks that have been really strong, when they take a breather, I find it really important that another sector or group starts to take over.
Sure.
Because otherwise, if you get a rolling correction, that's really positive. When 90% of stocks go down because the market's so weak, everything goes down. So this is really positive as far as I'm concerned. So Microsoft is suggesting that if it breaks the 456.16 high, it's at 447 right now. I've got a target that says by the 4th of February, it should try to tackle the 456.16 last high. The all-time high is 468.35. So in this particular phase now, with everything that happened yesterday to tank these stocks, these tech stocks that were possibly being affected, this looks to me like it's saying, hey, Microsoft's going to enjoy this. So far, it's looking very good. So that to me was important. So today was a very important, we haven't closed yet, but so far the day's been very important in saying, what's working and what's not working,
yep.
What's trying to move. And the other thing I've done in my newsletter is I'm trying my best to get into sectors that haven't really worked, but it looks to me like there's a slow swing to those areas. And if you can get in early enough, then you benefit from having prices move up, and you can survive the vicissitudes of those swings when you get close to the low. So this, to me, it's the same thing if you're looking at the gold stocks. I mean, the gold contract has just been steadily moving up, just walking this 9-period moving average and looking very good. And there's this rectangle formation that suggests that the last high that was made, and we are along the gold, at 2825.9, this rectangle formation, the technique that I use says that it should make higher highs and higher lows, and it should even go to a leg D, just under, right on, or just above the previous high. That would be the objective. So far, gold looks like it really wants to tackle the last high that was made in the 2800s. So, I think that you've got to be very selective. And look at this. Gold and silver very often go together. One leads and then the other follows, and the other one leads, and they rotate through. But look at silver at this particular time. Silver's lagging. So we'll see if that usual situation will occur. But this is not the same chart. Look at the daily, weekly, monthly. Yep. Nothing like the gold or go back to the gold. So I think this is a very selective move right now. And we must expect quite a bit of volatility over the coming weeks. But identifying sectors that are working is really important.
Yeah, definitely. And like I was saying to everyone before we brought you in, I mean, the pivot you had in the newsletter, I think, is phenomenal. And guys, I strongly recommend checking this out. This is the opening call newsletter by Basil Chapman. You know, Basil, I think what you were saying as well, right? The money is kind of moving out of one sector, maybe into something else. You're seeing Microsoft get some breathing, like within kind of cloud compute and everything.
I mean, look at Zoom.
Yeah,
all of a sudden, Zoom was down in the doldrums. Yeah. All of a sudden, it's having a move up $7 today at 88. Just yesterday, it was tootling around in the 80 area. So that's exactly what I'm talking about. That fund managers, were like you and I yesterday morning. They had to wait. They had no clue. They had to wait for what was going on. So in this particular instance, they waited, and now fund managers are saying, hey, we got to be careful of some of those areas. This is working very well. So all of a sudden, you've got something that was in the doldrums starting to work, and that's kind of what I'm trying to identify at this particular point.
Well, I think that's great too for the broader market, right? I mean, this isn't like something that scared every investor out of the market, right? And we get some kind of like, low volume moves to the upside. It's now people just kind of reevaluating, like, all right, we've moved this sector up pretty substantially. All right, we have some questions on that. Let's see what can benefit now from what we've been investing in. And I think that is a positive, at least in the short term, to the upside for the market entirely. Yeah, I mean, Zoom up 8.10%. I mean, wow, look at that, right? Apple up 4.03. So there's been some good moves.
So the other thing is, so look how Apple's gone from 260 down to where it goes right to this. And this is what I emphasize for subscribers all the time. Look, it went right to the 200-period exponential moving average. It was unbelievable. Right there for 2 days, 3 out of 4 days, it actually touched that line, and now it's having a very good move to the upside. So that's what I'm saying. There's this, you wait for the dust to settle, and then you see what's now working, what's accepted the new paradigm or whatever it is. In this case, it'll be DeepSeek, and move on from there. And that's, I think, what Apple's saying is, hey, we're a survivor. We always are. And don't get out of long-term positions because we always come back. I mean, that's just the way you have to look at the market. And I love this because within the context of the volatility index, that yesterday was sharply lower. And I said that if we're able to start to see the VIX come down, I mentioned that in this morning's newsletter, that if in my show, that if the VIX starts to pull back, maybe we can close towards the high of the day. And that's kind of what we're looking at.
Fantastic. Basil, thank you so much. We'll see you tomorrow morning, 10 a.m., all right?
Thank you, Jacob. Have a great day.
You too.